In this video, we're going to look at buying and selling traps. I have a free mini course that you can sign up to. It's got 13 videos teaching you 10 different topics, and it's going to show you everything about risk management, technical analysis, and trading psychology, what you may be doing wrong, and how you can turn those results around and start winning. If you want to join that, head over to the link in the description. And if you want to dive straight into my in-depth education, there's also a summer sale running right now where you'll save 30% off my trading academy and also my trading group. So everything's there if you need it. Without further ado, let's jump into the video. Hello everyone and welcome back to the channel. I hope you're doing well. In today's educational video, we are going to look at buying and selling traps. Now, these formulate in the market every now and then, more regularly than we used to see them. And basically, a lot of the time, it's going to trap you into either losing a trade or trying to trade a continuation when really a reversal is about to happen. So what I'm going to do is show you the concept of these buying and selling traps. And then I'm going to show you how you can actually go about trading them and why you should be careful of them and kind of give you an idea of where they show up in the market. So what we have here marked on the chart is kind of an example of one of these buying traps. So there are buy traps and there's sell traps, and the sell trap is going to look pretty much just like this. So looking at this, what we can see is a supply zone. Okay, this is a supply, price comes in. A lot of sellers will have sell limits set at this level. They get taken out by price. Price liquidates above the zone, taking out the zone. This is where the trap comes in, because this is going to lead people to think, okay, the zone is broken. Now we could look for continuation buys. So some people would be looking after this break for a pull down, retest of perhaps demand here, and then a buy continuation. But what we see instead a lot of the time is a large sell-off, which is going to break through the structure and then actually lead into a reversal anyway. So this area becomes quite tricky to work with because it's actually quite a bit of a trap. It's not going to be a clear buy continuation, and it's also not going to be a clear sell because any selling that would have taken place here has now been taken out. So after this formulates, we are looking for a breakdown, pullback, and then the sell idea that we really want to see and the true reversal that we would want to see is going to come in at this point here. So that is an example of a buying trap. We take out sellers, we trap buyers, and then we sell off anyway. So any sellers here get wrecked, any buyers here get wrecked, and then the market continues to actually move downwards against what most people would expect. Now, on the other side of this, we have the selling trap. The selling trap is going to look something like this. Demand zone, pull down into demand. Buyers enter here with stop losses here. They get liquidated. Then the market pushes up. So anyone who thought selling continuation was a good idea after seeing this demand fail is also going to get taken out by the preceding buy move. So that is the basis of the buying and selling traps. Now let's go and look at this in live markets, and I'll show you two examples and I'll show you how you can kind of trade it depending on which way it formulates. What we can see on the chart here is a clear example of a selling trap. Now this is where sellers will be trapped in, buyers will take losses, even though the market is going to continue towards the upside. So the trap actually came in at this area just here. And let me break this down real quick for you. We had here a supply fail that indicates that price may be willing to push higher, especially with this large bullish impulse and slow pullback down. So if we were to look for buys at this point, which many traders did at the time, what would we be looking for? Well, we'd be looking for a demand zone reaction. Where's the clear demand zone? This is it just here. So buyers would be generally looking to come in from either the top or the midpoint of this zone, like so, with stop losses underneath. Now, then the target would be, let's just say the high, for example. But unfortunately, what happens is the market wicks below the zone, takes out the stops of these buyers at this demand, but then it actually flicks back up and continues up. So once seeing this demand zone broken, we will obviously see a lot of buyers taking losses. But what that may then lead into is a continuation for some people. Some people may say, okay, this supply has broken. We could look for continuation moves. Now, obviously, in this example, we wicked away very quickly. So if you were looking at the lower timeframes, for example, the 15-minute, you may have seen the break below demand and considered, maybe we'll get some sells on. Either way, even if you weren't looking for the short, because this one did react quite fast, a lot of traders will have been taken out and liquidated on this buy here by trusting this demand zone. Now, while trusting a demand zone like this may work a lot of the time, these traps can actually be quite unfortunate. What I generally will look out for, because I see this quite often, is refined areas. So that's going to take us to the first point on how we can tackle selling and buying traps. Now, remember, the concept I'm about to talk about is not valid for every single buying and selling trap, and I'll show you that in the next example when we finish talking about this one. But one way that we can actually get around the liquidations here, and one way we can stop being on the losing side of this trade, is to actually refine. If we look at this, we can see that demand is quite clear, but if we were to go to a lower time frame, we'll see there's actually still some open imbalance down here. So if we then go back to price, we will see this 2-minute demand zone down here has actually not yet been retested. So if we pull this over to the 2-minute demand, we can see there's some small imbalance at this area that hasn't been filled in yet. And this can actually give us what we need to understand that this could very well be a trap. So what I would choose to do generally in most occasions in my own trading, and bear in mind, I'm not a high frequency trader. I don't mind waiting for my setups if I need to. What I will generally do is actually use my buy and sell limits or entry executions from these kind of areas rather than these higher up ones. So imbalance is very important to me, and I always consider it in my trades. And you'll see why. Because if we'd gone with the buy limit at this 2-minute refined zone instead, with a stop loss under that zone, we would have then been tagged in on the trade and it would have ran very profitably towards where we were targeting. So here you can see an example of this trade. Had we used the refined zone, rather than being a losing position from buying here, it would have actually been a heavy winning position, taking it from the refined demand all the way up to that previous high. Now, obviously your stop may not always be this tight. You may want to go under the zone, but the benefit of this is you are lower to the extreme. You're closer to the extreme here than if you were entering off this point. Now, entering from this demand and putting a stop into here is going to reduce your risk reward massively. But if you went with a refined example, you get to keep the high risk reward and also get a nice high value setup. So that is the first way to tackle buying and selling traps. You can refine zones if there are small imbalanced areas either below or above the zones, whether you're buying or you're selling. Now, this isn't always going to be the case. Sometimes the trap may occur past this point. We may liquidate past this point. So what we're going to do now is look at a higher time frame example on GBP USD where this was the case. What you can see on the chart now is a more extreme example of a buying or selling trap. This one is actually a buy trap because we pushed higher. This is going to induce the buys and take out the sellers. So the sellers have been trapped by this. They've taken the loss. Now we are kind of inducing buyers, which is going to lead to a trap for them, because if the buyers see this as a break of structure, this is then going to lead them to buy into continuations. They'll get trapped into this and then they're going to get wiped out. So as you can see, we have the supply zone here. The supply zone failed. So any sellers that were looking for entries at this point are going to be taken out. This continuation is then going to trap buyers in. They may see, okay, there's still some open imbalance over here. Maybe we could trade through some of that. And then they'll look for the buys off either demand zone here, wherever it may be. And then they will be taken out. Now, this trap is a little bit more difficult to work with because we have actually broken into an imbalanced area. We haven't traded into a refined zone. So we can't really, in this kind of example, use that opportunity that we spoke about in the previous example of looking for refined zones. This is quite a clear high probability supply. So when this fails, we should never really be looking above this for entries because obviously it could break out and continue higher. So what we have to do in these examples is use structural confirmation. And what I mean when I say that is basically waiting for the market structure to re-agree with you, and then we can take the trade. So for a trade like me, I will generally be using confirmation entries for my trades. Sometimes on extreme zones, being the furthest zone at the top or the bottom of a move, whether I'm selling or if I'm buying, that's where I would, generally use sell limits. So for a trade like this, I may have been taken out, right? Let's say I executed this trade and I was looking for my sell around the midpoint, as I usually would for a high time frame trade like this, with a stop loss over the high and a target lower. Chances are on a trade like this, I am going to be taken out of this position for the 1 hour loss. But it doesn't have to end there if structure then re-agrees with you. So what we can do is actually watch price, and if it begins to roll over again and the structure becomes in agreement with your original plan, you can then relook for a new trade to execute and take lower. So if we are to look at this, you may think, how on earth am I supposed to tackle this trade? But what we've got is the supply fail, liquidation, but then a very clear and fast sell back down. Now, if this sell-off had brought us into the boundaries of this demand, we could then just look for continuations upwards perhaps. But what we've actually seen is a sell-off that has broken through demand, causing this kind of demand fail just here. And also rebroken through the structure at this level here, and also at this level here. So what this kind of tells us is this could be a kind of major breakdown. And what we would do in an example like this is then look for a new selling idea to go with the trend because we have it reconfirmed. So here is a kind of hypothetical idea at a setup that we could take now in line with this trap. We had the trap, we took the first loss, or if you were going for confirmations, you wouldn't have. But now we've had a new breakdown in confirmation structure. We've had this big sell that has broken structure, we've seen a demand fail, and that re-agrees with the overall picture we were looking for, kind of confirming that the likelihood is this was a trap. And we can probably now continue this down comfortably because we've had that structural change that we like to see. Now, if you've been watching me for any length of time, you will know that this is generally how I like to get into my trades. I like to see a break in structure like this, from a high interest area. I would then look for myself from this point. That is where I like to get in. Stop loss either here or here, depending on the nature of the setup. And then targets wise, I will be pushing down towards obviously an imbalanced demand zone or something like that. So this is exactly the kind of pattern I like to use to get into my positions. And if you monitor this, this is exactly what we've seen. We've seen the push up, we've seen the pullback, we've seen the push up. Now we've had a breakdown, which is broken through structure. So what I'll be doing is looking for the most reasonable supply zone to trade from. Well, all of this is efficient. This is the area that broke the structure. So this is the one that I'll be looking for my rollover to come in from. And that is kind of how I would tackle this and how you can see the structure formulating into a very nice setup in the same kind of manner that we would use it in any other trade. But if we are to let this trade run out now, let's see, there's our tag in. We trade around for a little bit and then this sell-off comes in. And that is the completion of the trap, how we would tackle it and how we would profit from such a position that becomes quite difficult to profit from in the first place. When this trap comes in, trade gets stopped out and we get tricked into potential continuations. So buying and selling traps come in quite a lot. They are probably not the work of some evil entity trying to trap you in the market, but it's just simply kind of based on the concepts that many people trade nowadays. It's going to become difficult when you do get caught in these. You'll think, okay, we've been taken out now. This losing trade did not work. Structure has broken, so potentially we could look for a buy, and then actually it rolls over and turns back into a sell. So with it being a trap, it turns out, no one is really trying to trap you here, to be honest, but in the way that the market works and the concepts that we trade being structure, liquidity and imbalances, this is somewhere that we can get trapped by using those concepts. And having those concepts at the forefront of our mind can trap us because we could see this as a break of structure when really it is just a liquidation of this high before the rollover comes in. So that is the concept of buying traps and selling traps. I've showed you an example of the buy trap and a way around those. You can use refined zones for entries to cut down your rate of losing and actually increase the risk reward and confidence that you have in your trades. And then for the more tricky examples like this one, and this is the real star of the show in terms of traps, how we would tackle this. We don't just sell in straight away at the liquidations. We would never sell in at the first push down because we could just pull up and then fly away. But what we can do is use structural confirmation and a new shift in the structure and a new shift in the trend from higher highs into lower lows and lower highs. And then we can execute off that as if we were trading a standard confirmation pattern. Because at the end of the day, when the structure formulates as it has, that is exactly what we are seeing, even if it did take out supply. So I hope this video has provided you with some value. If it has, please do let me know in the comments. I've got many more videos on my channel as well that you might want to check out as well that I'm sure will provide you with some value. So thank you for watching and I'll see you in the next video.